Welcome back. Today we got PPI, producer price inflation, and oh dear, let's see what's going on because last night oil prices were tanking. This morning it looks like they're ticking up slightly again. We've got WTI sitting at 69 and international blend Brent at 73.71. Definitely a big drop that we've seen. I mean, we're at some of the lows that we've seen the past 2 summers here. All the geopolitical tension, so to speak, has been priced out of these a lot, potentially because of China's disinterest in actually providing the stimulus that everybody thought China would for sure do. And we've been talking about this for like a year. People are like, oh, invest in China. They're going to do a bunch of stimulus to prop up the economy. And I'm like, I ain't investing in China. And sure enough, here we are with China all year long. Disappointing expectations for growth, but also stimulus. More stimulus now scrubbed over at China. This is depressing oil demand and oil prices across the world. Which is actually great for the reduction of inflation expectations in America. Inflation expectations yesterday after the CPI report, even though it wasn't a CPI report that showed us a very strong plummeting of everything, it is directionally falling CPI inflation. And we got break evens that fell yesterday after this oil news and CPI report. I was actually surprised by that and wanted you to see it as well. So let's grab this screenshot. Yes. Okay. All right. We'll grab that so you can see them. But the 5-year break even 2.08. And then right now we've got PPI coming out within the next 2 minutes here. So I'll get that screenshot up. And in the meantime, we've got PPI coming out. PPI, there it is. Okay. You know, the Dropbox sync has to kind of wake up and stop being groggy, and then it starts working faster. So what do we got? Look at that. 2.0825, 5-year break even. Look at that. That is some good old declinage in the CPI. You know, Murdoch here says, what time is PPI? What time? Kevin, what time is PPI? Fortunately, you don't have to wait very long. It's in 45 seconds. So, buckle up, boys and girls. Expectations. Ready for them? If you want to write them down, get ready. Right after you write down meetkevin.com and buy that gold course. More lectures coming out by the end of this month, totally for free. Should be very exciting. PPI, month over month, expected to be 0.0. PPI core, X food and energy, month over month, expected to be 0.2. X food energy trade, expected to be 0.2. Year over year, expected to be 1. Just 1% inflation. Year over year, X food energy, 2.2. Year over year, X food energy trade, 2.8. Ready? Here we go. And we have, okay. Month over month matches 0. X food energy trade comes in weaker at 0.1. Oh, let's go. Core PPI X food and energy comes in at 0. It was supposed to be 0.2, comes in at 0. X food energy trade was supposed to be 2. 0.2 comes in at 0.1. Year over year comes in at 0.9 as opposed to 1.0. X food and energy year over year comes in at 2.0 versus 2.2 expected. They're all low. PPI X food energy trade come in at 2.5 versus 2.8. Let's go. This is really good. Really good numbers here. And this is great for the leading indicators of inflation. Remember, a lot of this, in my opinion, is driven by the deflation that we're actually getting from China and Germany. We are getting pure deflation from these areas. Folks, I want you to see these numbers just so you don't have to take it from me. Look on screen, okay? right here. Expectation versus reality. Let's go. That's great. That's really good. Oh, and a downward revision last month. Oh, wow. There we go. Last month, final demand month over month was expected, or last month came in at 0.5. It actually just got revised down to 0.4. Everything just moved in the PPI numbers in the direction that we would want them to go. This is great. Okay, let's go ahead and get the BLS producer price inflation document so we can actually go through the individual report. And then obviously let's watch how the market is reacting. Again, we're expecting stocks up, yields down. You're getting you got a little bit of a candlestick over here. Interesting, the interest rate sensitive ones, barely a move on Tesla. Somewhat surprising there. Or Enphase. It's like they haven't even woken up yet. Q's though moving. As far as yields, yeah, down 3.4 basis points. They're just now starting to move. You're looking at 4.17 on the 10-year right now. Here's the actual BLS. Yeah, I know a lot of people are like, BLS, you mean BS? Oh, wait. There it is. Oh, hold on. Wrong spot. Oh, come on. There we go. All right, here we go. Producer price index for final demand was unchanged in November, seasonally adjusted. The BLS reported today final demand prices increased 0.4% in October and rose 0.4% in September. On an unadjusted basis, the index for final demand increased 0.9%. Okay, we already read those numbers off. I want to see where it's coming from. All right, ready? Index for final demand goods was unchanged in November after dropping 1.4% in October. In November, the price increases of 0.6% for final demand foods and 0.2% for final demand goods, less food and energy, offset a 1.2% decrease in final demand energy. Okay, we want to get out of energy since we know oil prices have been falling. Within final demand goods, prices for chicken and eggs jumped over 58%. Whoa. The index for fresh fruit, melons, and utilities, natural gas, electric power, carbon steel scrap also moved higher. In contrast, prices for gasoline fell 4.1%. The index for processed poultry, chemicals, jet fuel, liquefied petroleum gas moved lower. Okay, I want to see the numbers here. So yeah, let's just go to the numbers. So final demand numbers here. I want to get the actual detailed categories. Hold on. Because these are so complicated. The categories they give you here, they give you that final demand, the intermediate demand, and all these sort of different levels here. So here we go. Weights, that's what we want. The detailed chart where you get weights and changes. Oh, this is exciting. I like me a good inflation report. J Powell happy today. All right, here we go. Oh, quickly, let's get our guide here. This is the weight. So third column in is the weight. And then look at the far right column for the 1 month change. Okay. So there we go. Final demand services. Let's go. Flat. Look at that. Final demand services flat. Final demand trade services negative 0.2. Let's go. Trade of finished goods negative 0.2. Trade of personal consumption goods negative 0.3. I like where this is going. I remember for a while we're like, hey, can we get some exciting negative inflation reports? Soon we'll go through this and it'll just be a bunch of negative lines. We were so excited about that coming in. Here it is. I mean, look at this across the board. It's all red, or yeah, it's all negative. Excuse me. All right. Transportation of private passengers, transportation of government passengers, transportation. Okay, more. This is all negative. Final demand services, less trade, transportation, warehousing, 0.1, super nominal. Finished consumer services, less trade transportation, 0.2. Annualizes to about 2.4. Even if inflation was 2.4, it'd be kind of good. I'm getting a headline here. Doomberg is like, oh, this matches expectations. How do you figure? No, they pick the one they want. They almost all came in negative. Government purchase services, less trade transportation, 0.2. Great. Services for export, less trade transportation, warehousing, negative 0.3. Final demand construction, negative 0.2. Final demand exports, 0. Final demand less government, 0. Final demand less food, 0. These are all nominal. I'm just trying to see, honestly, if there's anything that's popped here. Final demand goods less energy, 0.3. So if you just, that's interesting. If you just take out energy and you don't take out food, yeah, because food had a bump. That's why you're getting 0.3 on that one. Chicken prices, which on a month-to-month basis, we see volatility in food quite a bit. All right, let's see if we can get a little bit more. Goods for export, positive 0.1. Total exports, negative 0.1. Services for export, negative 0.3. Personal consumption, less food, energy, and distributive services, 0.2. This is so nominal. Processed goods, materials and components for manufacturing, negative 0.4. Materials for manufacturing, negative 0.7. That's great. Materials for food manufacturing, negative 0.6. That's all plummeting. Materials for non-durable manufacturing, negative 0.9. This is good for the manufacturers. I mean, the costs are plummeting. That's great. Materials for durable goods manufacturing, negative 0.5. Components for manufacturing, 0.1. Materials for construction, 0.1. That's great. Processed fuels and lubricants, 1.9. Oh, that one's not good. That was like the first one I'm seeing not good here. Processed fuels and lubricants. But otherwise, negative. What else here? Unprocessed stuff, materials, foods, non-food items, massively negative here. Unprocessed fuels and there's some very specific things here though that have popped a little bit. Like, what is this one? Unprocessed fuel to non-manufacturing industries. Okay. Let's see what else here. Transportation and warehouse services for intermediate demand, negative 0.2. Transportation of passengers, negative 0.6. Great. All right. I think we kind of get the idea here. Stage 4, goods, food, energy. Yeah, food saw a little bit of that push there. But otherwise, lots of negatives here. Let's see if anything's popping out. Not really. Yeah. Very interesting. Okay, let's see for a moment how things are reacting here. So here are the Qs. We're up 33 basis points right now. Here is Tesla's not really moving. Enphase isn't really moving. NASDAQ, and NVIDIA is not really moving. Apple is going up. Apple's up like another % in the pre-market. I think there's still like a belief that, hey, if the stock market's going to go up, well, Apple has to go up. So it's like that safety kind of play. Apple, Google, you're not as quickly seeing that rush to the more sensitive industries. What's moving up today? We've got today in the pre-market, not much actually. I mean, the highest move up today is about 1.6. Flipped by SolarEdge at negative 1.5. PPI feeds market confirmation bias. Is it confirmation bias or is inflation actually falling? Markets are often guilty of confirmation bias, and so this morning PPI is just what the street was looking for, lower than expected readings, provide some justification for the aggressive rate cut pricing embedded into the strip forecasts, even though the Fed targets consumer prices. And we obviously got those yesterday. The modest dip in yield seen after the data is understandable, but probably not sustainable. Ooh, fine, be little bears. But they're basically saying the Fed might not care as much about some of this other data. They've made it clear that they kind of look at all of it, and they want it all to be down. And I've generally looked at PPI as something that leads. In fact, boy, I wonder if I could just put up a chart. You know what? I think I can. Let me pull up PPI. Let's go with PPI non-seasonally adjusted year. Okay, well let's try PPI year over year, and then we'll go PPI final demand year over year, not seasonally adjusted. We'll try that, and then we're going to compare that to CPI year over year. And why don't we put those charts together and then see if there's any kind of lag? Oh, wow. Like, does one lead the other, right? Because if PPI is plummeting and PPI falls before CPI, then, excuse me, then you would cheer a low PPI read, as eventually it might actually show up in prices stabilizing, right? So let's look at the chart. I'm going to show you a chart that plots CPI in blue and PPI in white. Okay. Here it is. So what you can see with PPI right here is that it looks like they both peaked out in roughly the same month. But look how quickly PPI, after it peaked, fell much sooner and much more rapidly than CPI. However, in the same place that CPI had a little bit of a bump, this is sort of the bumpiness part, so did PPI. PPI being the white one, CPI being here. So whether they're correlated or whatever it is, it's clear here that that there's a relationship between the two. And PPI falling as low as it just did is fantastic, and should help the trajectory of CPI move down. This is exciting. So, okay, good. All right. Now what? Okay, let's go see what some of the suits are saying. We'll start with over here.
We have got great leadership from across the board, House and Senate, Democrats and Republicans supportive, but we have to go through that process. But it's one we've been through before and one I have great confidence in.
I guess Monumental's also been negotiating with D.C. Ted Leonsis, as you mentioned, has hinted that he'd be open to moving the teams. They've asked for $600 million in public funding from the District of Columbia for that planned renovation. If they don't get it, the thought would be that they move. But with this deal, Monumental is agreeing to put down hundreds of millions of dollars in its own money for this project, correct?
They are. They will make over a $400 million upfront commitment to the development. They'll move their corporate headquarters to Al.
Yeah, I don't really care. Somebody asked me yesterday, should I invest in OpenAI? And I thought, well, first of all, hashtag not financial advice. And then after I got that out of the way, I'm like, why the hell would you invest in OpenAI at a $90 billion valuation? And I was thinking, well, maybe if you thought that there'd be like no competition and that the OpenAI software moat would be untouched. And then I thought, well, Bard, Google, is going to do everything in their power to kick OpenAI's butt. Elon, with Grok, whatever, is trying to kick OpenAI's butt. Facebook's trying to do it. There's a lot of competition. And now the path has been paved, so to speak. I could not pull that off, managing an OpenAI 94 bill. I mean, like, for you to hope for a 10x on it, just to be extreme, you're basically saying OpenAI should be $1 trillion company. And I'm like, yeah, I'm not convinced by that. There are plenty of other opportunities. And where it all eventually runs is on servers. That's what I want to invest in. For now, at least. It'll change in the future. Oh well. All right. So, let's see. Let's get to... I want to see what yields are doing. All right. Well, that's... Oh, and I want to see if break-evens are moving after this, too. Yeah. All right. 10 years still down 2-ish. Was down 3-ish. And maybe Bloomberg was right. The 2-year down 2.6. And obviously we're watching the SPY and the Qs here. Tiny little bit of upward direction here, though it's not that straight skyrocketing. Oh, what is that NASDAQ candle that just came through? Big old red stick. I think that's a glitch. And they call that a Weeble glitch. It's not, no data came out. It's not showing up at the top left either. That's interesting. How low can we go? Yeah, okay. So we'll see. That'll update. Anyway, today's Fed Day. It's really important to remember that it's going to be Jay Powell's job to temper expectations, to limit this euphoria that may come from people trying to get Jay Powell into this. Yeah, we're going to start cutting rates and talk about cutting rates and all this nonsense. Jerome Powell has so far refused to say we've even capped out on rates. They're playing with us. They're purposely toying with us because they know we won't be able to contain ourselves. We'll be like a little unneutered puppy. As soon as we hear this idea that rates have hit peak, we're like, oh, I'm gonna buy every bond there is. Then bond prices go up, yields fall. And do you then potentially induce inflation? I don't think so. But there is a risk that inflation expectations unanchor, and unanchored expectations could lead inflation to rise. It's all about those inflation expectations. So I think they'll have to continue to manage expectations that they're basically willing to do whatever. And I don't think they'll actually make any changes until, honestly, probably until they cut. I mean, think about it. Why do they need to say they've peaked out? I mean, I guess you could. Like, there are two things here. If you really wanted to say we're probably done, I don't know what benefit there would be to that. I don't think there would be any benefit to that. All you would, like, saying we're done is almost like cutting. So why bother saying you're done? Don't commit to being done. Just commit to following the data. So never say you're done. And then in addition to never saying you're done, when it's time to cut rates, just cut rates. So, I think you're going to get a punter here from Jay Powell today. He's going to punt this meeting. But I don't think he's going to hawk. I think there are a lot of folks expecting he's going to hawk because of financial conditions, which have loosened. They haven't loosened so terribly after his latest opportunities to speak and crush them. I mean, we've watched him twice since the last FOMC meeting, and he has not tried crushing the market. So I'm not convinced that Jay Powell is going to be pretty pissed here and need to hawk. I don't think he's going to be like, yeah, let's send stocks to the moon. But let's take a look here. If I'm Jay Powell, I'm just thinking, I got to punt this stupid meeting. I wish I didn't have to do the meeting. We're going to be data dependent. We should make a bingo chart again. We will. These are financial conditions. Financial conditions right here on the right side, you can see that large decline we've gotten. On the middle left of where the far right is, you'll see June 2024. It's right here. Sorry, 2022. 24. Oh, Kevin. Anyway, yeah. Fed speak won't change until they cut, I bet. Very generic like last time. I agree. Bears confirm their bias, calling evidence that counters their narrative confirmation bias. I love that line. That's a really good one. That's a good one. I'm going to take a screenshot of it now because it's funny. I think even when he cuts, he'll still be downplaying it, knowing he can't control it. Yeah, I actually wouldn't disagree with you that maybe when you start cutting rates, you know, we're going to cut 25 basis points, but that doesn't mean we're done. That's probably what he'll do. That doesn't mean we're done. We're done. He'll just never commit to being done. You know, if the data comes in back, we'll go right back up. And he'll come up with some fancy example. Like he'll do like, you know what I would do if I were him? I'd be like, we're going to treat rates as like a float, a water float. And if inflation and the data come in hot and the float moves up, then we're going to move interest rates up with it. If the data keeps coming in soft and the float moves down, especially on inflation, then we're going to move with it. So whatever we get is what we're going to do. And then every meeting, Jay Powell just needs to do this. Do I really need to explain it again? Huh? It's very simple. When the water level in the toilet goes down and it floats at the bottom, we stimulate our toilet. Yeah. Anyway. Oh, man. I can't believe I'm using toilets to describe the Federal Reserve. I don't know. Maybe that's aptly appropriate. Are you accounting for Plater's financial position or contract just this year? I mean, Palantir. I mean, I personally like Palantir. I think their balance sheet is one of the best I've seen. How many drinks have you had this morning? Yes. Oh, just coffee. Somebody else says I need a drink. Half of their work is done by managing expectations. Exactly. I'd be willing to bet the market is subdued because J-Pow is talking today. In the past 24 months, he often screwed us right after a report. Springfield and surrounds with the photo on like the Pacific Heights staircase. I agree with you. Kevin, the numbers change and he's not going to be put in the box. That's right. Do not put my water float in any kind of container. It's certainly not the porcelain goddess. A rising float means a turd has... Shut up. Socrates didn't say that. They didn't. I don't even think they had... Did the ancient Greeks have like plumbing for their toilets? I know Romans had running water. And I don't think they had floats back then either. I think the toilets they had were those overhead, string pullers, eh? I don't know. We can have an old Roman toilet. If even that. Well, string pullers might be more like 1800s rather than negative 400. Socrates. Ancient... what was it, like Pompeii had all those outdoor toilets? Ancient Roman toilet. Yeah. Oh, okay. No, what I was thinking of, I thought it was Pompeii. No. Yeah. These were the toilets. They're like the communal ones. I've seen these in person. Actually, they let you go in and sit on them at some of the areas. Oh, they've since cordoned it off. No way. Now, back in the day, you used to be able to go sit on them. Huh, that's cool. Anyway. All right. So, next. Let's see what they're saying here. Pfizer tumbles after 2024 sales and profit miss forecasts. The vaccine company? What? People don't want to invest in Pfizer anymore? Oh, it's down 7%. Wow, man. This thing's bleeding out worse than a meme stock. Okay, maybe that's not true, but it's certainly a bleeder. This thing's bleeding out worse than Enphase. Oh. It'll all be okay. All right. U.S. producer price is cool. Below 1% as energy slides. We saw that. What else? Republicans. What is it? No, that's nonsense. Apple TV to lose 80% more than streaming rivals combined. Oh, wow. Apple TV to lose $6 billion in 2024. Wow, wow, wee, wah. Very interesting. TikTok Shop is looking to beat Amazon on its home turf. Predatory lending apps from China are wreaking havoc across Asia. X-City Trader wins. Oh, this is all boring. All boring. What's this?
The excess out of the system.
I don't want to let you go without talking about.
Oh, this guy
at NYU Langone.
Okay.
Paying for
free
medical students,
right.
free medical school for
right.
everybody who comes through.
Right.
How and why?
How is very simple. We had enough people who believed in what we were doing to give us the money. Myself and Druckenmiller and people like that. We did
like $1 billion that you've raised.
Close to $1 billion. But these kids, there's going to be a huge shortage in America of primary care physicians, OBGYN, and pediatricians. 110,000 in 2030. It's not going to be affordability. It's going to be availability. A lack of availability. We need to figure a way out to motivate these kids who are brilliant and who want to make the world a better place, thank God. We have to figure a way out to help them reach that and do it in a way that they're more concerned about making people better than how much money is in their pocket. These kids make enormous personal sacrifices physically. Just the effort to become a doctor is a very challenging. Then, by the way, I don't get any greater joy than to see these kids showing up, white coat day, 21, 22 years old, full of piss and vinegar, want to go after it. And boy, you say, thank God we got kids like this.
Piss and vinegar? Who are you calling full of piss and vinegar, you old man? I'm just kidding. I'm just all right. Yeah, thank you in the comments here. The Wall Street Journal is pooping on Tesla. The Wall Street Journal is suggesting hold on, I got to shout out what's your name here? Where is you? I don't know where you are. You were in here somewhere. Oh, here. Andrew. I bet that's Tate in disguise. No, I doubt it. Tate wouldn't understand what we're talking about. Oh, shocker on the front page of the Wall Street Journal here. Tesla to recall more than 2 million vehicles over autopilot safety concerns. Oh my God, 2 million vehicle recall. How are all those people going to go into the service center? The lines will be out the door. Oh my God. Tesla will recall more than 2 million vehicles over concerns its autopilot system can be misused by drivers amid a 2-year probe by auto regulators. The recall covers some of the sexy cars sold in the U.S. between 2012 and 2023. Oh my gosh, it's everything. It's all of the cars. It's everything. It's everything, folks. It's every car they've ever made. Tesla's autopilot system may not have sufficient controls in place to prevent driver misuse. There's an increased risk of a crash when autopilot is engaged and the driver doesn't maintain control. NHTSA has reviewed 956 crashes where autopilot was said to have been used. The company will offer owners a free software upgrade. Oh no. Oh no. A free software upgrade. Oh no. Regulators open an investigation in 2021. What are we going to do? What are we going to do? Oh no. I'm devastated. Tesla needs a software update. Holy crap.
They're going the right way, so why not have them continue to go the right way? You just don't know what's possible in terms of what could come back. So why let it bite you, given the fact that unemployment is still under 4? David,
Oh, he's
as long
talking
as
about
unemployment is under 4, I don't think there's any reason to let up on the fight.
Okay.
Especially because there are some like existential issues of how much debt, what could happen in terms of if there's more spending in Washington. I mean, I know these things seem small, but they all add up.
No, they don't seem small, Jim. And we have discussed them. We sort of do, and then we kind of go for a while, and then we do again. Every time there's an auction now, we're gonna focus on it more. We look at the maturity schedules in terms of what Treasury's planning. So it's not an insignificant factor. The amount of issuance that has to take place, both for refinancing purposes and for funding these deficits that we're running, is important. And of course, the words of Gunlock a while back when he was with Wapner talking about $2 trillion in interest costs if rates were to stay where they were over the next 5 years in terms of what gets refinanced, that gets your attention.
Yes, it does. It does. There's an amazing document from Fred Smith. I don't know if you guys know Fred. He built FedEx. And he did this Coolidge speech, which is making the rounds and is so informative, talking about the huge amount of debt that the government has taken on just in the last few years, calling for a debt freeze. But when I read these things, I say, you know what, look, we have to be worried about inflation still. And the money coming from the government, Carl, is still gigantic. And I think potentially very inflationary for 2020.
This was the subject of a B of A note yesterday, entitled, in part, Fed Can't Touch This, looking at areas of the economy that rates really have no power over. One is the amazing amount of home equity and liquid assets that the American household has, but government spending, Jim, is, in their view, going to keep rates higher over the long term.
I'm with that. Look, I know Fred from way back, and I don't want to just say, well, listen, I read this one guy and I feel this way. But I mean, it kind of jives with what I've been thinking, which is that we own a bunch of stocks for my charitable trust that are based on largesse of the government in 2024. And that's just going to, that's just a major cause of inflation. And Fred talks about how the only reason we get away with it is that we have a strong dollar so you can refinance things. But if I'm Powell, I'm going to say, look, there's nothing I can do. I've got all this money coming. I got to wait a little bit. Let's see what happens. It's not like anyone is calling for a freeze, David. You're not getting anything from Washington which says, you know what, we're done spending. It's kind of the opposite.
No.
Yeah. So the interesting thing here, I think, is this idea that the Fed doesn't have control over so many different prices. Blah blah blah. I actually enjoyed. I was looking at. I was trying to break this down yesterday, and I think we should finish doing it right now. There was this posting by the Perma Bulls over at Fundstrat, who suggested this on CPI yesterday. Here they have core CPI month over month. And they're showing trying to see this. This is the CPI month over month percent change. And I think what they're doing here, November year over year minus October year over year. This is an interesting manipulation here. So this is a very bizarre. Look at this. So on this column, they have the month over month change, which here, that's where you see like public transportation up 4.8%. Medical care, I think, is in here as well. New vehicles, 5.3. Sorry, those are the ways. Here, month over month change. Let me read their column right. Leased vehicles, cars and trucks, 4.7%. Public transportation ex airlines, 4.8. Health insurance, 1. And then some minuses over here. But what they're doing is this is a little complicated. CTG month over month. What the heck is that? CTG. Anyway, it looks like it's the difference between the month over months between this month and last month, which would be very nominal. And then what they're trying to say is the only thing that's moving up between months is shelter and used cars. That everything else is basically super, super, super nominal. So, I mean, this is a very, very, very and this a bull would put this together, I feel like, because what you're doing is you're literally trying to find the change of the change. And I don't mean like the derivative. I mean the difference between the change of last month, the month over month, and the difference of this month. I guess I wouldn't. It's not derivatives or rates of change. That's the percent. I don't know. Anyway, they're trying to say like if motor vehicle prices went up, let's say 0.1% in November, and then they went up 1% in the next month, then the number would be 0. There'd be no change between those 2 months. So they're trying to find that the difference between the two, which obviously is going to look very, very nominal. And then they're trying to put this together on the chart and say, oh, look, see, the only thing that's going up is shelter and used cars. And after that, everything else is negative. But, health insurance may have stayed at 1% month over month, but that's still way too high. Just because, I mean, basically, the problem with this chart is if it stays high, then it's 0. See what I mean? Like water, sewer, trash collection at 0.3, that's too high. That's like 3.9%, right? But if it stays the same month over month, then it's 0 in this person's chart. So I think this is a very misleading chart. I think it's nice to be able to look at this chart and say, oh, yeah. I think, what's it called? What am I trying to say? Basically, what you have here is a little bit of a presentation of data that I think is very misleading. And it's and as much as like I want to be, bullish and look at it and go, oh, yeah, that's exciting. I don't think it's a really good idea to put it together like this. Because, again, even if something stays high, it makes it look like it's not high. Because if the change is 0, then they list it as 0. But that's very misleading to people. So, I don't know, for some reason, isn't that permabull Tom Lee there? Yeah, he is. Tom Lee, analyst at Fundstrat. Yeah, so that's, I try to look at both sides, and this is too manipulated bullish. It's not fair.
Should be flying. I mean, it got approval to be able to have, so if you wanted to do it before.
There are other migraine drugs. There's a new class of drugs that are incredibly effective.
Yeah.
And life-changing for some people, frankly.
Well,
so it's not like there's
the shot I take.
Yeah.
I take Aimovig, but I'm just saying that his projections, the projections that he put to the street.
Yeah, let's see.
Those are like a fortune, David. Give them back to me. But the projection, when you buy something for $11.8 billion and you miss the numbers, this is my point. You miss the numbers immediately.
These expired. 10/22.
Man,
You use it or lose it, Jim.
There goes that.
I mean, stock's gone from 52 to 26 in about 12 months.
Well, I mean, what was I remember Frank D'Amelio. He was the old CFO.
Of course I do. I remember a long line of CEOs as well.
But
Hank McKinnell, remember that?
Sure, but he told me,
Yeah.
listen, we got a really bad loss of exclusivity, period, a giant cliff, and we're going to make it up with a series of acquisitions, and we'll use the money from COVID.
Well, they
he
used the
retired
money
in
from
2022
COVID to buy a series of companies.
But
CGen obviously being the largest of them, but there were other acquisitions as well.
And I didn't think that.
Boring. All right. So pre-market's pretty stable. 36 basis points here on Qs. Don't know what happened there. Tesla's still down nearly 1%. Palantir 69 to the upside, 24 bips on the SPY. We've got, let's see here. What do we got? Pfizer down 7, Enphase down 2 in pre-market. Nothing really moving up more than percent and a half. Let's get I'm gonna go get a little bit of street research here. So let's see what we got.
So but there's
listen to this for a second.
All right, that's not.
That was
good.
that wealth destruction.
That is
But isn't
good.
the lesson about sort of thematic discipline? When you're Lilly, you stick with diabetes and you just hammer away at it.
Eli Lilly.
Yeah,
Getting
I agree.
distracted, or
But
did you hear Ken Langone this morning, guys? I thought on Squawk Box, Langone was particularly articulate on both succession and the importance of succession, picking the right person, how critical that is. And really, I've always said it's the number one job of a board of directors. And then he's been in Lilly forever. And by the way, the stock did not do a lot for a period of time, and then it exploded. But take a look.
Love that random laughing in the background. Anyway, what do we got here? Bank of America. The end of the hiking cycle. Incoming data continues to point to a moderation in growth and economic activity heading into the end of the year. October factory orders slipped 3.7% month over month, while core durable good orders were revised lower, show a more pronounced decline of 0.3% month over month. The decline in non-durable goods ordered is notable given the robust rebound in the category since the mid-year. Elsewhere, at a reading of 52.7, ISM services remained in the expansionary territory, modestly ahead of October's read. Modest deterioration in job finding rate, low separation rate. The economy may be cooling, but based on the data at hand, it does not appear to be in retrenchment. Altogether, we're tracking 1% growth in real GDP for Q4, with 1.9% growth in personal consumption offset by weakness in residential and non-residential fixed business investment. Okay, so if I go to, let's go look at the Fed now real GDP. When do we get a new GDP estimate? Is it today? Today's the 13th. Well, I don't think it's until tomorrow. It's tomorrow. Dang you. It's sitting at 1.2% right now. Okay. November inflation, soft headline, firm, core. Looking ahead, we expect these trends to continue in the soon-to-be-released November employment situation report. November situation report. Hold on a sec. Oh, okay. Yeah, this one's that's interesting. I wonder which one they're talking about. They're talking about JOLTS? I don't know. Let's see here. Yeah, because this report, it looks like, was from last Friday. Okay, so that's not too useful. But it kind of gives us a little bit of a heads up going in. CPI forecast, market implied. Hence, we think the Fed will hold again in December. Hawks are... We do not believe hawkish holds are credible at this stage. Oh, this is interesting. Okay, I'll get rid of that. We do not believe hawkish holds are very credible at this stage. Greater evidence of disinflation. Since November meeting, most FOMC data has viewed, or most of the FOMC participants have viewed incoming data as pointing to slower growth and greater evidence of disinflation. In our view, the committee is not ready to shift from a tightening bias all the way to an outright easing bias. Right. In the next 3 to 4 months, is likely the case that FOMC would view a potential hike as slightly more likely than a cut. That's just what they'll say, basically. Yeah, okay. Language remains neutral. Hints of dovishness. Yeah. All right. Okay. See another one. I love looking at what Wall Street suits are saying. But I want to look at some... let's go to today. Let's see what they're dumping on us. Oh, we've got some FOMC previews. I love these. Here we go. Fed to hold again, though cuts not imminent. Little suspense in the rate decision. Further in progress on inflation fight. Let's see here. Fed will want to keep the option open of an additional hike. Yeah. However, we expect the dot. Oh, wait. Do we get the dot plot today? FOMC meeting schedule. Oh, we get an SCP today. Yes. I love those. Those are so fun. Summary of economic projections includes the dot plot, which will include forecasts for what interest rates will be by the end of next year. Ooh, today could be really fun then today, because not only do we get their hold, we're going to get their guide for future positioning. Let's go. However, we expect the dot plot will suggest that the Fed has reached the terminal rate. Yeah, hold on. Let me move this really quick. Let's see here. Save. There we go. All right. Let's see the dot plot. Okay. However, we expect the dot plot to suggest that the Fed has reached its terminal rate, with the 2023 median coming down to 5.375 to align with the current level. Yeah. Well, duh. For the current for 2024, we expect the Fed could lower the median by 25 basis points, maintaining 50 basis points of cuts next year that were shown in the prior version. Ooh. If the dot plot looks like this, it would be in line with our current base case, in which the Fed cuts by 50 basis points in the first half, with the first cut arriving. Oh, no, that's the second half, actually. Half 2, 2024. With the first cut arriving in July, is their opinion. Expect Treasury yields to decline. As the Fed finishes the rate cut cycle, we forecast the 10-year Treasury to trade at 4.1%. Okay. Although the yield curve should stay inverted in early 2024, inversion will gradually disappear later in the year as the easing cycle begins. We expect the Fed to be slow in cutting rates given the sticky inflation backdrop. As a result, we recommend patience in putting on curve steepeners. Okay. There's little suspense in the rate decision itself. Well, yeah, no kidding. All right, this is boring so far. All right, let me find a different one. Oh, wait, hold on a sec. I want to see their table. This is their table, their expectation. Credit agricole's adjustment. So what is this? Change in real GDP. Oh, wow. Really, they really expect it to come in soft for the end of 2024, down from that 1.5 projection from the Fed. I don't know. I don't know if it's going to be that low. That seems pretty bearish. So that's so close to that recessionary level of negative. Inflation numbers, Fed funds rate. Oh, they think they'll forecast about, yeah, that there's that 25 basis point decline in the forecast from the September projection. Because they did forecast cuts in the last one. Now it's just a matter of, okay, how many? How many, Fed? You know, tell us what you think. Okay, let me get some more here. That's an interesting preview. How about this one? Okay, we covered that one. That's the same. JP Morgan's preview. Okay, here we go. Boom. Next week, the FOMC is widely expected to leave the funds rate on hold for the third consecutive meeting. Post-meeting statement will likely retain tightening bias that has been in place for several meetings. Perhaps most attention will be on the dots. Totally agree. Revisions to economic forecasts will likely show lower core inflation next year, and we think they'll show some easing. Look for around a 4.75. Oh, hold on, 4 7/8 rather. That's interesting. 4 7/8. There we go. 4 7/8. This is barely a move down, is what JPM thinks. They think the growth estimate for this year will be revised up. Core PCE will be revised down. At the same time, what about GDP for next year? What does JPM think? Here we go. Oh, real GDP. Yeah, they don't agree with Credit Agricole at all. Agricole's like, oh, it's going to come down at 0.4. What? That's so low. Whereas here, they're suggesting, nah, JPM thinks it'll be 1.6. Be pretty stable, slightly below trend, but not recessionary. Interesting. I'll get another one, but I want to listen here for a moment. There's a talk of Tesla.
Pure recall. I'm just pointing that out.
Yeah, we'll talk about it. Talk about the loss of some of these credits as well. Got some new EV growth estimates from Morgan Stanley today. Pretty interesting. We'll get Cramer's Mad Dash countdown to the opening bell. Futures look fairly positive in the wake of some of that cool inflation data this morning. Of course, Fed decision coming up in just about 4 or 5 hours. Don't go anywhere.
Okay, we'll come right back. So here is Morgan Stanley's Fed preview. Let's see bottom line here. Hold. They're at the peak. We expect little change in the statement, but the summary of economic projections will show a cautious shift. Ooh, see, I like the sound of that. A little wake up that the Fed has the Fed gone too far. Don't overdo it, boys and girls. Here we go. We'll show a cautious shift. Rate strategists stay biased on long duration into the meeting, though remain wary of the payroll data ahead. Let's see here. What data do we get here? So I don't know what data they're talking about. Payroll data ahead could reset the narrative. What? What payroll data? Oh, their Fed preview is from last week. Oh, that's lame. Okay. It's just a put together of all the previews. All right. Oh, that is not as recent then. Dot plot also probably shifts down. No need for an additional height this year. Shifts back from 3 to... Oh, shift back to 3 from 2 rate cuts next year. And we'll see. Okay, let me get one of the others. About 7 minutes to the bell here. How about Goldman Sachs? Rate cuts sooner, but not too soon. Okay. Let's see why. There we go. Recent inflation data has been very encouraging. Recent inflation data have been an encouraging surprise, even to our optimistic expectations and our forecast for year-over-year core PCE inflation has fallen somewhat as a result. Healthy growth in labor market data suggests that insurance cuts are not imminent. Yes. Better inflation news does suggest that the normalization in cuts could come a bit earlier than expected. Kevin, you do know the Fed works for the banks, right? Is that it? Or do the banks borrow from the Fed and the Fed has all the rules in place for the banks? Somebody here says, Kevin is brainwashed by CPI numbers. Oh, must be a bear who's been left behind. The dot plot will set the tone for how the market finishes this year. It could be. It's the last what's it called? Fed meeting of the year. It'll be very interesting. We're therefore pulling our forecast of the first cut forward to Q3 2024. The change does not reflect any major shift in our thinking, but rather that the rough threshold for cutting that we've given previously has now been reached earlier. You know, this is you're seeing a lot of folks kind of go from Q4. We saw this a couple of days ago as well. Q4 to Q3 narrative. Revise the forecast that the Fed will start cuts Baseline forecast, greater asymmetry of risks to the downside. Yeah. There we go. Probability weighted forecast is now even further below our baseline. Still modestly above market pricing. FOMC projections to show 2 cuts next year. I don't think it'll go up to 3. 4 minutes left to the bell. Economic projections should reflect better inflation news and the continued resilience of the economy. Expect a small upward revision in GDP to 1.6. So really, Credit Agricole is the only one that actually thinks this data will come in such a way that GDP actually comes. I mean, look at this. Here's Credit Agricole. It's from today. This piece is from today. And when we look for their GDP read, where is it? Didn't know where it is. Dang it. Anyway, wherever it was. Oh, I found it. Here it is. Credit Agricole thought this would come in. Look at that. Change in GDP. They really think it's going to be, I mean, these are bearish numbers right here. I feel like those would necessitate more cuts. Very interesting. So here you can actually see the market falling a little bit into the open. Dot plot comes out at 11 a.m. today. 11 a.m. Kevin, with inventory being so low due to everyone having a low interest rate, how will the increase in home prices affect the economy once rates come down? You know, nobody really knows, but there's this belief that possibly as rates come down, inventory rises, and that actually keeps prices depressed.
You hear those?
Yeah, I don't know.
Sounds like somebody's hitting something and then whoosh.
Yeah, we're blue
All right.
and white now.
Anyway, that's the new introduction
Yeah, all right.
to the
Good stuff.
Mad Dash. I like you walking by the bowl. I like
Yeah.
that.
Yeah, I think it's good. I can't find the bear. I was going to walk around the bear, but it's been 7 straight up weeks in the S&P. So a bear must be extinct.
What
I
gonna
don't know.
do J&J?
You know what? I want to do this.
Oh, no. Jim Cramer just said the bear must be extinct. No.
They struggle. And J&J has a drug, Stelara, which is their big drug, and that's got a loss of exclusivity coming in. Wells Fargo today downgrades J&J, saying they really don't have enough to replace Stelara, and they think their medtech growth targets appear optimistic. They only at the very end, in a downside scenario, do they mention the possibility of setback in talc. But this is just kind of a tough business. And if you're J&J, and I think you're sitting there, you're thinking, wow, I mean, we've got a lot of money. We're doing everything right. But we do have drugs that come off patent.
Yeah.
And that's just the clock ticking.
Yeah.
So, and I don't think anyone questions that J&J is not investing. But
No, they're not. I mean, I know, but I don't know. There's some people. I mean, I'm looking at the longer term. Let's go 10 years on J&J. It's not bad. It's nothing compared to Pfizer.
you know, it peaked when they lost some talc decisions.
You know, AbbVie's got something coming off patent, but they've been incredibly busy. And by the way, that stock, to be fair, has done very, very well.
Well, it's got a big dividend. Everyone thought the dividend would have to be cut. No, they've made some acquisitions.
Yeah.
By the way, they have a rival migraine drug.
Remember,
that's
they
the same.
made back-to-back weekly acquisitions. They're almost roughly the same size. One was 10, one was 8.
But I just think that, let's understand that Dr. Borla isn't the only one that
Here we go. It looks kind of like it's falling, by the way, into the open.
has these things that, I mean, if you're Hershey, you're not sitting there and saying, I had 17 years and then I got to give away these chocolate bars. So let's understand the industry itself. Not such an easy industry to be.
Let's get this session underway. Get the CNBC real-time exchange at the big board. It's the Explorers Club supporting scientific expeditions and at the NASDAQ ECD Auto Design.
I don't like that new little chart thingy they got there. What is it like? This is nasty. It looks like trash. Go back to the old. Anyway, it looks like about 80% green. Let's actually see how things are moving. I'm like old man Kevin here, complaining about change. Anyway, 32 bips. Looks like we're trying to move up here, actually. Green candle sticking on Tesla. Green candle sticking on the Qs. Trade desk ain't doing anything. Palantir's trying to rip. Google's trying to dip. Apple seems stable. Microsoft might have had some buying there right at the open. Intel 44. Isn't that a recent high? No, 45 was. Enphase down some more. Yeah, because that makes sense. You know what's interesting is now it's not in the wedge anymore, or the falling trend. It's just riding the falling trend. Oh, look at it. It got perfectly rejected by the fibs. Bro, come on. Oh, that's just bad. The TA on it is just not happy. It's just not happy. Okay. So open door pops 4% here. I wonder if that means yields are coming down here. Max is cheering Ulta. He's got to get his makeup in. What you got, Max? Oh, wow. That whole 0.01%. Let's go. I know they've been doing well. Good job. Oh, my gosh. CNBC's Tesla headline is Tesla recalls nearly all vehicles sold in the U.S. to fix system that monitors drivers using autopilot. I like that I could use my laptop with autopilot not noticing. Just kidding. That would be crazy. All right. Q's up. Tesla's trying to figure out what to do. Bonds down 3.6 points. You gotta look at the day chart. I know, Max. I'm trying to mess with you. I know it's been up. Broadcom up nearly 20% last week. Is that true? Let's see here. Does Tesla have room to recall all these vehicles? Where are they going to put them all? How many loaners do they have to buy? Yeah, look at Broadcom. Holy smokes. That was not in my bingo set. Holy smokas. Yeah, and they do a lot of like the 5G modems, like Qualcomm. They don't actually do a lot of what's it called? AI stuff. Now, obviously, all of them are going to say they have AI. But anyway, yeah, the Tesla bot video was very cool. A lot of enthusiasm coming for the Tesla robot. Wall Street just going to have a hard time pricing in what that could mean for potential revenues for the company. Anyway, NVIDIA here, up 67 bips. Tesla's trying to go green. Let's see if we can get a gain the lead here before the course member live. Let's go. Let's go. Somebody says, what's your worst case from the Fed today? Kevin has been a pimp all of 2023. Is that good or bad? Do I want to be a pimp? I don't know, man. I'm married. I got 4 children. Maybe they'll even be more soon. I don't know. All right, what was I gonna do? I was gonna do something. Oh yeah, duh. We have the course member live stream. We'll do some analysis coming up. But first, let's keep looking at what some of the market. I want to see what the suits are saying on market open here. So let me schedule this quickly for 6:45. There we go. Oh yeah, Tesla, come on, push it, push it. All right, Jimbo. Oh wait. It's almost there. It's almost there. Oh, you got like it's edging us.
Reduction in the primary endpoint of change from baseline, the weekly average of daily pain intensity.
Yes, and therefore I think that the idea that it's up 29. Look, if this is right now, it's diabetes related. If they can just say that's just what universal pain. Well, I mean, this could be one of the biggest drugs of all time. We could make it so that you don't get 3 tablets or 30 tablets of OxyContin after you've had an operation.
Hey, man, that is a feature, not a bug. You know how much I could sling that for? Just suffer the pain, start slinging it. Didn't do that. 0.93% on NVIDIA. Tesla's trying to get to green. Q's going green here. Okay, let's see. Oh, as I say it, it's now down. Dropped another 20 bips. Let's go look at what the suits have. Okay, 10-year treasury down 4.2%. Let's go. 4.4% now. 10-year treasury is plummeting. Let's look at the 5-year break even. I want to see that plummet too. Come on, baby. Come on. Is this the Santa Claus rally we're hoping for? Oh, 5-year break even falls even more. 2.07 now. Let me look at it on the 5-year chart. Oh, that's so nice. Such a good chart. It's the 5-year break even forwards. Should look at Fed rate cut pricing as well. Yeah, let's do that. Let's get Pfizer's down 9%. Nvidia's up 1.6, back to 482. Okay. JetBacks. Here we go. Look at that. Boom. Yes. It's the 5-year break even. I really want to see the 5-year break even break. Like, you know when you get cuts, right? Talked about this before. You should know this. Very simple. We're going to go over here to the crisis of December 2018, right here in that corner. We're going to try to draw a line all the way across. That's basically when you guarantee cuts, in my opinion. So, yeah, well, this is good. If we then look at the 10-2, we're down. Oh, we're actually more inverted at negative 52. Okay. Well, there's something for the bears. I guess there's something in this market for everyone. Broad-based cooling in prices is boosting risk sentiments. Reinforcing the stock-friendly case for a soft landing. Yeah. Who would have thought inflation would come down? Tesla's stuck at about negative 50 bips. Qs are still going up. Broadcom's up another 2%. Dude, Broadcom. Wow. Let's go deep on Broadcom today in the Course Member Live. We've done it before. So we'll go again and we'll compare. Let's see what's going on. Open Door, 6%, probably on this idea of falling mortgage rates. You've got still some pain on the solar and energy sectors here. Those are just so out of favor right now. Oh, the euphoria will come. Down 70 bips on Tesla now. Darn, it was so close to zero. It's like cheering for zero. Very interesting. All right. Let's see here. What are you saying, Jim? Give us something interesting.
Is this the end of our non?
The Magnificent Seven. Okay, everybody but Tesla.
On the beach? What are you talking about?
I don't know. I'm just trying to figure it out.
Well, let's just say that.
Oh, I never answered. What's the worst case for the Fed? Basically, a dot plot that keeps rates above 5% for the end of 2024. That would be very bad. So if the market's pricing in, 4 to 5 cuts, and the Fed's like, JK, we think 1 cut, that would be bad. Or if they go up, that'd be horrid. Very bad. Do I have any thoughts on Rumble stock long term? Well, I wonder what their trends are. Rumble in my bumble. That was lame. All right, let's see here. Rumble, 5 years. Why can I not search Google Trends for Rumble? Oh, Google's censoring us? We're getting censored? Let me try YouTube. It's not working. Google Trends are down right now. I don't know. Is Rumble gaining popularity? I have no idea. Kevin, in 2007 to 2008, recession started half a year after rate cuts started. Why would this time be different? Yeah. Well, we've talked about that before. And we've talked about that quite a lot. That the time usually the stock market bottoms is when the Federal Reserve has a substantial pivot, or we call it the U-turn, which the pivot is like maybe when rates pause or slow down and then they start coming down. The U-turn is like when the Fed's like, oh my God, everything's going to crap. We need to print money again. Those U-turns happened in the late 80s, 2003 in March, February of 2009, December of 2018, March of 2020. All of those were excellent buying opportunities. There's this thesis that now the Federal Reserve's basically markets are trying to pre-price in the Federal Reserve cutting rates. And that's what drove the idea of the Nike swoosh, the volatile Nike swoosh. And it's basically a way of saying, look, we know that when the Fed U-turns, historically that's been the bottom. Can the market try to pre-anticipate the U-turn now with all of the additional communication we get from the Fed now and how much attention is actually paid to the Fed? And so that's one way of softening expectations for, Fed rate cuts and a recession. In addition to that, rates are high now because of inflation, and they're expected to come down as inflation comes down. Whereas, some of these other crises, we've had a lot of other things that needed to be solved in addition to just inflation. So you did have some inflation in like 2006 and 2007, but what you really had was a housing price bubble. Then people argue, well, we had a stock bubble this cycle, just like 2003. Maybe, so there's no way you could say for sure one way or another. But things to pay attention to, I suppose. All right, what do we got? Yes, this is the trend's not working. All right, let's listen in here. What is this?
U.S. Steel. That's what we got for you this morning. Board's going to meet today. U.S. Steel's board is going to meet today, and they are going to go over what I am told by people familiar with the process is a number of bids that are in excess of $40 a share. Now, I'll give you a little more granularity to the extent I have it, but some of it is fact and some of it is in more the realm of I'm not completely certain. So let's call it speculation. What I am certain of is board's meeting today. Multiple bids are in excess of $40 a share. Doesn't mean we're going to get an announcement tomorrow, by the way, from what I'm hearing, because there still could be some back and forth here, as they make their decision ostensibly about what represents the best bid for the company. As you see, the stock's moving up a little bit on that. We know there are any number of bidding groups. I've been through them prior. Let me give you a
boring. All right. Let's go look at oh, thank you regarding the camera problem. I didn't notice that. What is it focused on? I have no idea. Hello, camera. Hello. Oh, it's stuck. It's stuck. Hey, I was gonna say some people might prefer that. So, all right. Where do we sit? Enphase down 2.6. Pfizer's going to trash, down almost 10%. Tesla gave up its attempt at clearing here. You've got the Qs coming down a little bit. It's probably honestly just Fed anxiety. Like, how do you rally before the Fed meeting? It's tough. Tough to do that. You gotta get the Fed. We gotta get J-Pow to tell us.
Just close the fucking door. Close the door.
Anyway, let's keep watching the sticks here for a moment while we prep for the Course Member Live. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Yeah. Anyway, 2-year and 10-year falling in conjunction today, or coordination, however you want to say it. And obviously watching as some nervousness sits in the market, with the exception of NVIDIA. No nervousness at NVIDIA. NVIDIA is convinced. Straight up it is, along with Open trash. I mean, open door. All right, folks. Thanks so much for being here. Remember, I'm live every day. The market is open at 5:25 a.m. California time for about an hour.